Hello guys, good morning. Um, in this video, I will try just to explain to you something very important about what will happen when you get stuck into a stock. Okay, the first thing I want to tell you is, regardless of from where do you get the stock or when you buy the stock, or which strategy do you use. Okay, we begin from the beginning. You buy a stock. Okay, 100 shares of Apple or Facebook or any other stock that you have. Okay, now I know all of you, me, all the traders, all the investors, what are we looking for? We are looking for money. Okay, to make money from the stock that you bought. Okay, now let's say the stock, after a few days, since we are doing swing trading, it goes down. Okay? Let me drink some coffee. Now, you begin to see, when you open your account or broker account, you will see that you are in red. I don't know, I don't understand why the people, they see themselves in red and they are like, they don't worry a lot about this. You are in red, what does it mean? Just in real money wise speaking, the market is taking money from you. Okay, so psychologically you said that you are stuck in this stock. Did the market send you an email, or did the market tweet you or Facebook you or send you an email and tell you, oh, I am going to go up with this stock? Obviously no, and you know that. Okay, so who is the responsibility to buy and sell stocks? Who? You say, oh, it's me. Okay, it's you. Now, if the stock is going up, we are not speaking about this today. We're speaking just when you get stuck. Now, when you get stuck in this stock, okay, you want a solution. That's why a lot of people, they buy too much. Someone bought like $250,000 a stock, and the stock goes down, and he began to lose a lot of money. Now he told me, what do you think? I say, have you a plan for the stock when you buy it? Have you a plan in your head? Because the most important thing to think about, even before when you buy a stock, is to make a simple plan. Okay, what's this simple plan? If the stock goes up, you will stay because you are right. Now, if the stock is going down, the logical thing that the beginners, they don't want to understand is when you exit. And if you don't think when to exit, this is one of the biggest problems beginners face in trading. I'm not speaking about investing, because investing, you are waiting many years. No one knows what will happen this new year and many years. Here, my subject is just swing trading. It's just you stay for a few days, weeks, or months, but it's not years. Okay? Now, the trader who gets stuck in a stock, he wants a solution. Now, although he is the only one who knows the solution, okay, I'm not saying sell or buy more as other people do, okay. Excuse me, I should drink this coffee. Sorry for that. Okay, so here is the solution. Try to find an exit. An exit, what does it mean? it means any price that you are comfortable with. I know you lose, and this is because you do a mistake by staying too much. Because if you stay just little, okay, and you exit, you will never get a big loss. And here is the difference between a professional trader and a beginner. A beginner thinks always that the stock will go down and then it will go up. Okay? Now, a professional trader never thinks that the stock will go up again. You know why? Because you will never know. Maybe this mutual fund who has like millions of shares, he is selling his shares. He can't sell in one day. Understand that. For example, if you see Twitter was $74 and now it's $14. In how many months it goes down? It doesn't go in one day. That's why these people try to advertise online. Oh, the stock has been going down. It's very good. Buy now. It's cheap. But they don't understand that if the stock is going down is for a reason. It means there are two reasons. There are very simple reasons. Don't try to find other kind of fundamental reasons about the company, because you will get lost. Okay? Don't follow this analysis and this economists and what they say. We are trading here. If the stock goes down, we have two simple reasons. One big reason is someone is selling his shares, a mutual fund or mini mutual fund, like Facebook, like in Twitter. It could be many mutual funds, because they have a position. At first they make money and then they see that they begin to lose money. So what they do, they begin to sell. Now when they sell, they can't sell all their shares. Now you and me, we can sell. If you buy 100, 500, 5,000 shares of Facebook or 10,000, it's not a big deal in the billions of dollars a day that Facebook or Twitter is doing. Okay? So you and I, we don't count, although we have small money in the market. But big guys like hedge funds, like mutual funds, pension funds, banks, they have a lot of money in the stock. So when they decide to get rid of their shares, they can't do it in one day, because they have millions. Okay? So what do? They do what? They sell day by day. Let's say today they sell 100,000 shares. Tomorrow is the same. Tomorrow is the same. Tomorrow is the same. Like this. Okay, this is how the mutual fund work. Now, there are second reason for the stock going down is the short sellers. Short sellers is just day traders. Okay, most of them are day traders. Okay, in the morning they see the stock is going down, so he short. If he succeed and make money, it's okay. If it goes up, he sell. That's it. Okay? Now, for you, what is it? What is the solution when you get stuck? Try to see a solution for yourself, because you are the only one who knows. I can't tell you sell because I don't know your stock. When I see a stock, I see if the stock is going down, a small correction, or it is a downtrend. This is the most important thing to understand when we have a downtrend. A downtrend, it goes down many days, then it goes up one day or two. Then it goes down and it hits the support line, it goes down, it goes down. It's like this. It's the opposite of an uptrend. Okay, an uptrend goes up many days, then it goes down one day or two or three, then it continues to go up and up, and then it makes a new high, and this is how it works. Okay, so you should see. Okay, this is one thing. Second thing is compare your stock with the index it belongs to. Okay, for example, Facebook belongs to an index called internet providers. Okay, this is the industry. Try to check, is it better than industry or is going down like the industry? Try to check the trend. Are they the same? Are they the opposite? If it is the same, it means you will find that the whole industry is going down. So a lot of mutual funds are selling in that industry, and maybe they will buy another industry. So it's logical. Okay? Now, if you find your stock is going down and its index is not going down, what do you understand? You understand that this mutual fund or mutual funds holding this stock are selling. They don't like the stock, so they are selling. So this is for now. You should decide. I know there is pain when you have a big loss. I know. I have gone through this, and I will never go again. Okay? I know it's a big pain when you see lose. Someone asked me just a few days ago. He has a stock. I told you just an example of nearly $250,000, and the stock is going down against him, and he is asking me for a solution. Okay? I said to him, you should decide by yourself. If you get my training, you will know what to do. Okay? As I mentioned, many solutions. As I mentioned, to check the industry, to check the stock to the industry, and to make a decision. Now, if you have just a small loss, it's good for you. But if you have big loss, this guy is asking me, I am just waiting until the stock comes back to where I bought. This is another big problem that the beginners have in their head. He told me, I have seen other stocks before and they sold, but they go up again. Now, today, I'm not selling because the stock might go up again and I will have my profit, and then I will have my money back, and then I will have a profit. And I told him a simple question. How do you know that your stock will do the same as the other stocks? Okay? How do you know? No one knows. It's the future. So how can you rely on the hope that your money will come back? Now, this guy, I understand, he will stay more and more and more until he has a big loss. He see too much money taken from his account. And then he will decide to sell. But after what? After a big loss. Now, before it was just a small loss. 1%, 2%, 5%, 10% at the most, okay, of the stock, depending on your risk tolerance. Understand that each one of you and I and the other traders, they have different risk tolerance. We are not the same. If you give me a stock, I will put a stop loss. I will show you. And I ask you to do a stock, you put your stop loss. It's different. Another trader is different. Even professional trader, they are different. Why? Because the risk tolerance is different. No one trader is the same. That's why in my teaching, training level 6, how to protect your trades using a stop loss, is just to know your risk. Even though you don't put the physical order to sell. No. You can just see and wait and see where it goes. If it's against you and you begin takes money from you, you just sell. Now, this is for the people who get stuck. But the beginners, they don't do the right way. The right way, what is it? Is that when you buy a stock, before you buy it, you try to make a small plan. First, The plan, what is it? It's from the downside. You say, what if my stock doesn't go up? What should I do? Where is my exit? Okay? Don't let the stock, you buy the stock and you wait, and then the market is taking your money, and then you think, no, man, this is not the right way to trade. Even day trading, okay? Even day trading, which is people, they use 2 minutes candlestick or 5 minutes candlestick, they understand that. Now, when you make a plan, it doesn't mean that you put stop loss and when the stock goes there, you sell. No, you can make it what we call mental stop loss. Mental stop loss, you say, okay, I buy the stock at $20. If it hits 19, I'm selling. I'm losing $100 in this stock. Now, that is what you should do. You make a plan. This is the solution before you get to the problem. Okay? And if you follow this kind of exercise, you can exercise even on paper trading. Yeah, you buy stocks in fake and in a chart, and you buy and you sell, just to understand, to be disciplined. Trading is discipline. If you let your feelings go inside your trade, and you say, I will buy this stock and I will see tomorrow what will happen. Okay. Now, if you are thinking like this, believe me, you will never be a trader. You can make money one day or two, or in one trade or two or five. You can. I'm not saying you can't. But in the long run, you will lose that profit and you will lose your money. This is because you are not disciplined. You don't want to take trading as a business. You take it as something fun. Okay, you just do it for entertainment. Now, if you do it for entertainment with your money, it's okay. Okay, if you decide to do entertainment in stock market, you just go, you buy stock $1. If it goes up, you make some money. If it goes down, okay, it's the market, and the market take a big chunk of your money, 20%, 30% in each trade you do. 5 months, 6 months, 1 year, you will lose all your money. Okay, you will lose all your money. That's it. And then you begin asking why these guys short sellers, and then you begin to complain, and you begin to whine and to say, oh, the Wall Street guys, oh, there is conspiracy, international conspiracy on my stock, and they follow me. As someone tells me, whenever I buy a stock, it goes down. I say, man, there is some people who are following you, okay, in the stock market, following you, which means whenever you buy stock, it goes down. They short the stock. It means there are some people, maybe they are friends and they are following you. Man, wake up. In Facebook, for example, 3 billion, 4 billion changes every day. So what's this that you buy 1,000, 10,000, or 100,000? What is it? No one is looking at you or at your money or where it goes. If you know how to trade, you make money. If you don't know how to trade, you lose money. That's it. This is the rule that all traders know. That's why I always, in this 1 week, last week and this week, I try to offer my training just as a solution to all the problems that you have. A very simple solution. There is no indicators, there is no moving averages, there is no, you follow the news and you begin here and there and following analysts, following economists, and you begin to put crap in your mind, to put a lot of things. That's why you are always confused. You are always confused. You don't know. You touch the stock, you buy it, it goes down. You ask why. It's just because, first, you don't know an entry, a good entry. You are just buying a stock at any price. Okay? There are ways to enter to a stock. If you succeed, you will make money for sure. If you don't succeed, get a small loss and get out. Find another stock. That's trading. There is no other secret. People are looking. Someone told me, oh, I go to do your subscription 1 month or two and see if I can make money. If not, I'm going to other. I say, okay, go to thousands of people. You will never make money because you don't want to learn trading stocks. And this idea of a sure thing, a lot of most of the beginners have in their head. They think that there is a secret, there is a sure strategy. When you do it, it's like a trading software. What they say is trading. It's just for sure. If someone makes a trading software, it makes money. Okay. No. There is no stock market at all. Okay. Because this guy will take all the money of the market, billions of dollars a day, and he will be the most richest man on earth. Okay, but you know, it will never happen like this. So when you get stuck into a stock, check your stock industry, see if they go well together, they are the same or opposite. Okay, if it's only your stock that's going down, it means this stock has a problem. People are shorting it or people are selling their shares. And believe me, as a Twitter, if you see the chart of Twitter, when the stock was $74 and they begin to sell and to short it, okay? Suppose that you are stubborn and you don't want to get out. You will be having $14 from 74 to 14. You see how much you lost. You lost all your money. Let's say you put 100,000, 200,000, $1 million, all your money. You put it there and you wait until you go to bankruptcy, until all your money is gone. I have taught a student before. Okay, he put $250,000 in a stock, and he was investing. This is not trading. He was investing. Now, what will happen after a few years? Okay, the company go bankruptcy, and he lost all these $250,000. Now, the company will never tell you in 1 year or two before that they will go to bankruptcy. But the people who have a lot of money, they can get news from the company. Okay. And when they see a trouble in the company, they just sell. They don't wait. They have millions of dollars in this company. They sell. They don't think a lot. When they know that there is a problem in the company, they sell. And you have 1,000 or 10,000 or 100,000 in this company, and you are looking at it, at the company. It's going down. You're going down. You get stuck. But you say, okay, I'm going to stay. The stock will come up. I know the company is good. Who tells you that the company is good inside? Because outside, the company can ask analysts to speak good about the company. So they make you confused because these analysts or these people online, what they do? They are paid to tell you what they tell. For example, for me, when I tell you something, I'm not paid with anyone. If I say Facebook, there is the opportunity like in 2012 to go up. I bought it at $19.99 and they say it online, but at the time I don't have followers. I have just 150 people, or they watch my video for this 4 years, but they don't know. Okay? So, and I tell you always, when you buy a stock, it doesn't go as you think, as you hope. Just sell it. Okay? Even if it goes up again, buy it again if you want, if you are an investor. Well, what's the problem? But you are thinking about this little money that you lost. Little money that you are thinking too much about this, but you are not thinking after few days, few weeks, when you have a big loss. Instead of losing 2% or 5%, you lose 40%, 50%. Man, half of your money is gone. It will never come back. Okay? And some people, they stay and they wait. Just always try to think about Twitter as an example. Try always to put this in mind, that when the stock is going down and investors are selling, the stock will go down because there is a lot of supply in the market. And this is the simplest thing you can think of. When there is supply, what does it mean? It means mutual funds are selling, and short sellers are selling also other people's shares. So double action. That's why the stock will go down. But if mutual fund is buying the stock, okay, and these day traders are buying because they see a big power of buying, they buy also. Even the floor traders, even big traders who have millions of dollars, billions of dollars, they do the same. If they are doing day trading, they buy when they see a big opportunity, okay, to go up. But when things go wrong, they just exit, okay, either with a profit or with a small loss. Okay, those who don't understand, they always get stuck. That's why I offering training, very simple. You go through training levels 1, 2, 3, 4, 5, and you understand. If you don't understand, write me an email. I will explain more and more and more, just to make it clear that price doesn't lie. Twitter was $74 before, and it goes down. Does the price lie? No. Now it is 14. It can go to 10, it can go to 5, it can be sold, the company will be sold, it can go bankrupt. Everything can happen to a company. Don't think because a company is famous, nothing will happen to it. Because investors look at the money. The company is making money or not. If they know that the company is not making money, they begin to sell their shares. Not secretly, because the price of the stock is always going down, and you see it. It's not something secret. Yes, secret. They when they sell, they don't tell everybody. But after months of the stock going down, a mutual fund make a statement. Oh, I have sold 5 million shares of Twitter because the company is not making money. Okay. But he tells you this thing that he tells you, he can't tell you this information because it is a secret. It is a secret. No one does buy or sell and then he will tell the market. No one. Tell the public, oh, do this, do that. No one. It's a secret. But we are lucky that we have the price. The price doesn't lie. When the stock is going down, it means that it is going down. If you are losing money, it means that you are losing money. Now, if you hope that the market will go up and you get back your money and then you have profit, this is your idea, this is your hope. But the market is neutral. It doesn't follow hopes. It follows the traders' actions. If they buy, the stock go up. If they sell, the stock go down. That's it. Thank you very much and have a nice weekend.